The reality is markets fell by about a third in March and April of 2020 with the COVID pandemic setting in, and then rebound pretty significantly. And we've more than doubled from the lows. And, again, kind of an instructive moment that even when things seem dire, it might not make sense to sit on the sidelines in cash. So pretty significant rally. And of course, the question becomes, will the market rally continue? The big question to answer is what's going to happen with inflation, because the Federal Reserve has been of a mind that inflation is only transitory. And if we take a look, you can see that in the last 10 years, generally low inflation, anywhere from 3.5% to really zero, and mostly below 2% until the last year or so, where we've spiked and we're pushing towards 7%. And that's really starting to impact people across the board, whether it's at the gas pump, whether it's at the food store, in a restaurant, ordering items online, houses, cars, really inflation across the board. And so when we look at financial markets, really the question is there truly inflation, or is this just a measurement issue? And there's two kinds of inflation that we're looking at. There's the consumer price, and so that's what are most of the audience here paying, right? And the answer to that is more in the United States. And then there's producer prices, and again, there it's companies. What is the cost of inputs for a corporation to build something? So if you're a car maker, what is it costing you to assemble the parts and the materials in order to build the car? Oftentimes, but not always, those cost increases pass on to consumers via consumer price index. If they don't pass on, then what happens is that the company's margins are compressed and they make less money. And what you can see here is that producer prices are up even more than consumer prices. And so while if you look at the right-hand side, we see consumer prices in the United States, the UK, France, Spain, all up pretty significantly. Look at the producer prices on the left-hand side. In the US, up almost 9%. The UK is 8%. And then you've got double digits up towards 30% across Europe. And so, we've certainly seen some inflation on the consumer side, and we've seen even more on the producer side. And what remains to be seen is how much of that cost increase can be passed on to consumers. Because in the long run, I really think it's a double-edged sword. If you pass too many of those cost increases on to consumers, I think it probably restrains people's purchasing power. They have to be more selective about what to buy, and the economy probably slows down. That's probably not good for the stock market. The flip side, and kind of equally pessimistic, is if producer prices remain elevated and those cost increases aren't passed on, well, then companies' margins get compressed, they're less profitable, and that's probably a negative for some companies as well.
Are you prepared for retirement? Schedule a free financial assessment with an experienced financial professional right online at purefinancial.com.